welcome everybody. In the large and expanding market for sustainable or ESG investing, one area that perhaps is not as well known, but is equally fascinating in my opinion anyway, is the impact side, impact investing. So to talk about some of these issues, really pleased to be joined by Dan Summers, who's the managing partner of Boundary Capital, who are a boutique manager and they do specialise in impact investing in the UK. Dan, lovely to see you.
Hi Lawrence, great to meet you.
Now let's start with the easy question anyway. So how did you get into impact investing?
Yeah, it's a good question and an interesting one. We are B2B technology investors and entrepreneurs as a group, and we were always looking to make a difference with the technologies that we invested in. These technologies always had an impact, perhaps with a small I, and it was always around getting a good business case, fast forwarding to the future that we thought it could be, having defensibility, all of those good things, and of course looking for a high return. 10x return is the minimum that we look for in any one investment, because some things go very right and some things don't quite go as planned, and that's a good target. And what we realized actually was the investments we were most proud of were the ones that actually made a difference to people. And we also kind of as a group really felt very passionate that this was really what we wanted to do. And we look back at our investments and really we were doing impact. We hadn't got impact measurements. We realized that actually measuring impact is itself not straightforward and it's subjective in certain people's eyes. But really what we then did is we had a blank sheet of paper to say, well, look, we're here to make money, but we're also here to make a difference. We believe that the timing is right, that we can do both, and we've proven some of that. And so we set forth in the methodology. That took a lot of heated debates internally. We've got there, and we have what we're very proud of, which is the Impact Life Fund.
Lovely, and we'll come on to talk about the fund a little bit later. And that really interesting point that you kind of mentioned there about kind of measuring or assessing the impact. But just before we kind of get to that, where does impact investing fit into that kind of wider discussion about, as I said at the intro, ESG or sustainable investing?
Yeah, it's a great question, and I think in some ways it's freewheeling. It's kind of floating around depending on who's speaking. It has in some circles a non-for-profit angle and a social angle, and in others it's a badge which is being used to cover up something which isn't quite what it is. And other people such as ourselves, I think, have different views, passionate views about how the word impact is used when it comes to investment. Measuring money is easy. Measuring impact requires some judgment and some choices. And the way we've defined it is really around the impact on human beings. Of course, the environment's important. There are lots of other issues, but for us, it's all about the positive impact on human lives on this planet. And so we have a methodology which I've touched on before, but I'm happy to expand on, which, as I mentioned, we spend a lot of time on. It's transparent. We use it both to screen investments and to monitor investments and report investments. And it's uniform, whether we're investing in life sciences, electronics, AI, anything, it doesn't matter. The nice thing is, well, we spend a lot of time thinking about a measure that applies across all of those because they all impact the human at the end of the day, and that's what we've set out to do.
So is impact investing the same as ESG investing, or is it focusing, I guess, on just an element of it, which I guess could be the S, the social bit, which again in itself it can be quite hard to define.
So I think borrowing some thoughts from some of my peers that were on your other show, I think ESG is an operational measure in many ways. It's how a company behaves, and the companies that we invest in, we expect them to behave in a responsible way. But if they are the proverbial two people in a shed, I should say, or if they are the small startup, they can't afford to spend money on measuring their carbon footprint. That's not the point. We're looking for them, as long as they're responsible enough. Our mission and the impact we talk about is the impact that the company has on society, not how it behaves internally and it's the way it operates. So that's the sort of outcome driven impact that we define and we look for. So I think they're quite different. You can theoretically have an impactful company that doesn't have ESG, and arguably you can have the other two the other way around. I don't think there's many examples, because people in this space clearly want to do good and do it well in the right manner. But it's possible, and particularly when you've got very early stage companies that can't afford to spend on this kind of thing, but they make a huge difference to society, and that's what we look for.
And just following on, as you said, you know, you're investing in early stage companies. So why is EIS, do you think, suitable as a way to access impact investments, impact companies?
Yeah, so we're looking at early stage, not really early stage, but they've got a business model, they're making some money, and we think that they can accelerate to be one of the next big things and make a big impact. And from that point of view, the impact is ahead, is in the future. The company has a lot of operational risk. So EIS, by its very nature, particularly for B2B technology, some things can take longer than they planned. There's things which need to have the plug pulled without more money being invested after them if they're not showing the traction that's expected. And indeed, there's others that require the extra capital because they're just about to take off. And we don't want to get left behind in terms of where it's going. We want to maximize returns for all the investors and for new investors at a different stage. So EIS is quite fundamental in that early stage technology, because we're transformative and disruptive, and that's what we're looking to invest in. EIS really helps to de-risk that for the end investor, to enable them to participate in something this disruptive. Otherwise, really, they're waiting for things that are either on the stock market, which, as we can see, sometimes highly accentuated. The returns may be there, may not be.
And the returns point is an interesting one. I'm sure you've all been regularly asked this sort of, you know, do I have to give up returns for finding businesses that make a real kind of impact on society? And I think you've kind of already sort of partially answered that, but you know, just a bit more detail on that question, I guess.
Yeah, so I think it's a Venn diagram sort of answer. You know, there's the intersect between impactful businesses and businesses which, from a B2B profitable technology disruption point of view, we believe, and from our track record and our experience, that will accelerate and be profitable. And we're actually making the job very hard for ourselves, because I don't think it's completely a done deal that impactful investments are profitable and vice versa. They are two overlay systems. What we're seeing, though, is that Venn diagram, that intersect, is becoming larger and larger as society changes and as people desire more impactful goods and services, and also the opportunity for disruptive technologies to be sponsored and taken up. I mean, we've seen huge now sea change in the way that the US is operating. We're seeing changes in the UK, and when public sector makes moves that are significant to take up technologies which change, and people adopting UN and other guidelines, then of course it makes a difference. In the developing world as well, although it finds it more challenging because of the legacy that it has, you know, there are moves forward. So that intersect of the Venn diagram gets bigger. But I think that advisors and investors shouldn't underestimate that our job to find at investment committee level businesses that are impactful and pass our criteria on that front, and what we perceive as rocket ship profitable on the other, is not easy. And you know, that's where we earn our crust.
And you've sort of already touched on it a little bit, but again, a bit more detail, please, on the kind of companies you're looking for within the Impact Life Fund.
Certainly. So if I can just sidestep and outline the criteria from a financial point of view: 3x return in 5 years, minimum each investment 10x return. And there's other detail about defensibility, B2B transformative technology, you know, that could potentially go on to be a significant business. On the impact side, we've got 3 criteria that are multiplicative factors. We have the number of people it touches. It has to touch 100 million lives, 100 million people as a minimum. The second factor is that we have an impact factor, and obviously a therapy for a disease or genetic engineering will have more impact on a human than, let's say, an electric vehicle, but both will have equal impact. Both will equally have some degree of impact. And the third factor is a risk factor, which is to do with the state of the business. And so we multiply those three together and we get something which we call the equivalent lives impacted, our ELI number. If it's 1 million or above, we invest and we can go on to monitor that. So that enables us to compare quite equally businesses like that we invest in life sciences. We have an Alzheimer's therapy, molecule that's potentially a cure to even reverse signs and symptoms and for Alzheimer's. And then on the other hand, we have technology for electric vehicles. We have genetic engineering technology. We have investment into security. So in particular to keep people safe when businesses are using their data, and from that point of view, information security. So all of those things are quite disparate. They require different skill sets, and you can see the partners at Boundary have different backgrounds, and there's I'm the only one who doesn't have a PhD, but we have PhDs in from our other partners in life sciences, biochemistry, in AI and in physics. So it's quite a well-rounded, and my background is more the AI software side. So it allows us to both select appropriate companies, but to measure them the same way, because money is the same wherever it comes from. And now we've got an impact measure which is the same across them, which gives us the power to choose what we believe is going to make the biggest difference.
So yeah, Dan, just sort of following on from the point you were making there about, finding businesses that kind of touch, 100 million lives. I think we can all immediately sort of see, say, the Alzheimer's investment, that the impact that one could have. But the journey for all these businesses is, is potentially kind of quite long. How are you assessing the impact over the sort of period of the investment? And are you doing a sort of something like an annual impact report, for example, to keep investors up to date with how they are progressing?
Absolutely. So we see the impact in a 25-year time frame. So we're not investing for 25 years, of course, but we are looking for an outlook of things to change. So along the way, some of those forecasts, of course, aren't going to move the needle too much in our investment, in our 5-year investment time frame. But absolutely, some things do. Certainly, the operational risk factor changes considerably as the business matures and starts to make money or more money, and form its business model for the next leg of the journey. And absolutely, yes, to answer your question directly, we have 2 reports a year. They cover exactly the same criteria that we measured the impact to actually invest in it in the first place. It has to stay on track on those as well for us to reinvest. Of course, if it drifts, and then we'll still support the investment if it's making money and for economic reasons. But we haven't had any drift. We don't expect them to drift, and that would be quite unusual for the businesses to completely change. So yes, we're measuring them and seeing hopefully that impact progressing, and that the de-risking and that impact factor going up and up and up, as well as the profits.
Interesting. And just finally, Dan, we've talked about the Impact Life Fund. So give us a sort of few more details about the fund, minimum investment, some of the deployment period, any other key dates, and relevant fees as well, please.
Sure. So it's a minimum of £20,000. We look to deploy over 12 to 18 months all of the investments. The maximum concentration of any one investee company is 30%. So there's a minimum of 4, and we target 6 companies to be in that portfolio. And it's an evergreen fund. So we're here whatever the time of the season, and we do get investment throughout the whole of the year.
Lovely. Well, thank you very much for your time. Really enjoyed talking to you. Good luck with the fund. I'm sure we'll get an update later in the year. So if anybody wants additional information on the Impact Life Fund, you can go to the Boundary Capital website. There's lots of really interesting stuff there, particularly some of the blogs as well, which are well worth a read about some of the issues Dan's been talking about. Or of course, you can go to the GrowthInvest platform. But from Dan and myself, thank you very much for watching, and goodbye.
Thank you.